Good evening, everyone. Warm welcome to Regulatory Bodies YouTube channel by Testbook. My name is Madhav. I welcome you all in the next and a very important session on finance current affairs. So as you all know, this session is a must-watch session for everyone, those who are preparing for RBI Grade B, SEBI Grade A or any other regulatory body exam, because from this particular session, many questions will be asked not only in phase 1 but in phase 2 as well, and this session will set the foundation to answer finance related, RBI related questions in your interview section as well. So before I start the discussion, may I have a reply in the comment section that I'm audible, visible, everything is fine, we are good to go, so that we can begin the discussion without any further delay. Just give me yes sir, yes sir, yes sir in the comment section so that we can begin the discussion without any further delay. Okay, so here we go. Today I have many important news for you all. 3 are directly from RBI and rest of the 2 news, they are important news with respect to the financial world, but from RBI we have 3, 2 from financial world. In total 5 news will be covered in next 50 minutes or so. Let's begin the discussion. But if you want to download the PDF of this session, guys, I would love to inform you the PDF will be available on my Telegram channel, which is Economics by Madhav. Scan the code and join the channel in order to download the PDF after this session itself. Chalo ji. Here we go with the first question or the first news of the day. The first news from the finance current affairs 29th to 30th of May is related to RBI update. So what is the update we are talking about? Sir, RBI has issued draft guideline. Draft guideline means from RBI side, these are the guidelines, but RBI is seeking public opinion, public feedback on these guidelines, and once the feedback is received, then RBI will be checking out the feedback. If the feedback do not demand major change, then these guidelines will be implemented. These guidelines will be announced by RBI that they are ought to be implemented. But for few of the news, these draft guidelines are also important because a direct question can be asked on the draft guideline as well, and it has been asked in the past as well. So RBI has issued the draft guidelines outlining the procedures for the banks as well as NBFCs to issue gold loans to the individuals. Now I would like to discuss this point. The first point is gold loan. Gold loan basically means when the borrowing is done by the borrower, and against the borrower has come up with gold as collateral. That means कि आपने जो आपका gold है, फिर चाहे वो gold jewelry है या फिर आपके पास कोई gold ornament है या फिर आपके पास कोई gold का coin है, you can use it as collateral, you can use it as security, and against this collateral, against this security, you can borrow the loan from the bank or you can borrow the loan from NBFCs. That is known as gold loan. But with respect to gold loan, the conditions, the norms which banks as well as NBFC should follow, these have been introduced by RBI, and some of those important guidelines I will be discussing with you, from where objective question can be framed. This question do not possess capacity to be asked in the descriptive format, but yes, objective questions can be directly framed by RBI from these guidelines itself. First point, guys, you let me know in the comment section whenever an individual approach the bank to borrow the loan, obviously individual will park its collateral with the bank. Collateral, I'm talking about the asset which is used as security, which is used as an asset which will be safeguarded by the bank, and if in near future individual do not pay back the loan, this asset can be sold out to recover the loan amount. If the asset value is of 10 lakh rupees, you tell me bank will provide a loan value of more than 10 lakhs, bank will give a loan of more than 10 lakhs or equal to 10 lakhs or maybe less than 10 lakhs. What will be my answer? My answer is, sir, bank has a power. My answer is, sir, bank has a power. Bank can give loan maybe above 10 lakhs. Bank can give loan maybe equals to 10 lakhs. Bank may give loan less than 10 lakhs depending upon the requirement, and this requirement is termed as margin requirement. This requirement is termed as margin requirement. So what is margin requirement? So margin requirement, let's suppose, is 10% for car loan. Let's suppose it is 10% for car loan. It basically means if you want to borrow loan to purchase a car and you're using the same car which you're going to purchase as a collateral and the price of the car is 10 lakh rupees, in that particular case, you will be eligible to borrow a loan of 90% value and rest 10% value, which is the margin requirement. It is supposed to be paid by the customer. What is the logic behind? So the logic is quite obvious, because you are borrowing the principal on which you have to pay interest. So obviously the loan amount, principal as well as interest, it should be in accordance with the value of your asset, and that is the reason against the value 100% loan is generally not given. Bank comes up with a proposal to give loan less than 100%, and that less than 100% depends on the margin requirement. On the basis of this margin requirement, we also use a word that is loan to value ratio. So if I say loan to value ratio of this car loan is what? So it is 90%. What is 90%? So it means loan value divided by security value. So loan value divided by security value is known as loan to value ratio, which is 90% for my example. So I hope 2 points. First one, what is margin requirement? That is clear. Second point, what is loan to value ratio? That is clear. Now there is a question, sir, who decides the margin requirement? Then I would say margin requirement is different for different loans. Margin requirement is different for different loans, obviously, because it will depend on the asset, or it will depend on your collateral. It will depend on your collateral. Secondly, margin requirement is decided by individual bank. But limits are fixed by RBI. Is this point clear? If it is clear, then I'll go with the first statement. The first statement says, as per the latest announcement done by RBI related to the draft guidelines on gold loan, RBI said that loan to value ratio will be capped at 75%. Loan to value ratio will be capped at 75%, which means if you want to borrow a loan against 10 lakh rupees valued gold, then you will be capable to borrow loan value of 7.5 lakhs only. इसका मतलब ये है कि अगर आपके पास 20 लाख का लोन है जिसका मार्केट वैल्यू 20 लाख है, उसके बदले में जो आपको लोन मिलेगा वो 75% का मिलेगा, दैट विल बी ऑफ वैल्यू 15 लाख रुपीस. अब इसमें चेंज क्या हुआ? सर earlier this loan to value ratio was 80%. Earlier this loan to value ratio or cap was 80%, but now this cap has been changed and it has reduced to 75%. What is cap? So cap means the highest value, but loan to value ratio is highest 75%, but it's up to the bank. Bank may charge 40%, bank may charge 60%, bank may provide a loan of 65% or 70%, depending upon the requirement or depending upon the borrower characteristics, borrower creditability and whatnot. Is this point clear, everyone? Is this point clear? If this point is clear, just give me yes, sir. Rahul, I hope loan to value ratio is clear now. Moving on to the next point. The next point says, if you are reaching to the bank to borrow a loan, if you are reaching to an NBFC to borrow a loan, then you must submit the proof of the gold ownership which you are basically pledging with the bank. So the moment let's say you are taking up your jewelry with the bank and you say bank ki bhaiya ye jo jewelry hai, you can keep it as or you can pledge this jewelry and give me the loan against the same. But in that particular case, you must submit, you must prove your ownership for this movable asset, that is gold jewelry or ornament or maybe gold coin. How can I define my ownership? So you can define your ownership with the help of a bill or maybe the invoice which you have received at the time of purchase of that particular jewelry, ornament or gold coin. So that is important. अब मान लो sir, I have purchased 10 years back or 20 years back, I don't have the bill. So in that particular case, you have to come up with a self-declaration. You have to come up with a self-declaration document, and after that self-declaration document only bank will provide you the loan once bank is convinced that yes, you are the ultimate owner of this particular gold. Third point is lenders. Lender means banks or NBFCs. Lender means banks or NBFCs. What they will do, sir, they will give a certificate of gold purity and value when borrower takes loan against gold. It means if you submit your gold with the bank, bank will check the purity of your gold and they will give you the certificate on which gold purity will be mentioned, and on the basis of the gold purity, gold value will be calculated, and on the basis of gold value, considering loan to value ratio, lending amount will be decided. Next point is, according to the draft, only gold jewelry, only gold ornaments, as well as specified gold coins, Specified gold coins are those gold coins which are specially minted with a purity of 22 carats or higher, and they are sold by bank. So either you have a gold jewelry, or you have an ornament, or you have a specified gold coins which are issued by the banks. They are only eligible to be used as collateral. By the bank. Next point is specially minted silver coins, which are again sold by bank with a minimum purity of 925. They are also acceptable. As collateral. Moving on to the next point. As per the draft, you can borrow loan as an individual. You can borrow loan against gold up to 1 kg. That means you can pledge up to 1 kg of your gold jewelry or up to 50 grams of your gold coins in order to borrow loan from the banks or NBFCs, and these limits, they are uniform for all the regulated entities which are providing gold loans to the public. Last but not the least is, so the gold value will be valued at the price of 22 carat purity. What I'm trying to say in this particular context, please pay attention guys, इसे समझना बहुत important है. What it basically talks about. Sir, if I talk about this particular concept, it says, let's suppose there is an individual reaches to the bank, the individual 1. There is individual 2, he also reaches to the bank in order to borrow the gold loan. Purity of gold given by individual 1 is 24 carats. Purity of gold given by individual 2 is 18 carats. ठीक है जी, it is 18 carats. But when this gold is received by the bank, bank will be calculating the value of the gold. Bank will be calculating the value of the pledge gold on 22 carat basis. मतलब क्या हुआ, अगर 24 carat gold 100 grams है, अगर मैं कहूं 24 carat gold का मतलब क्या होता है? If I say 24 carat term is basically related to what? So 24 carat gold is basically related to purity. I don't know कि आपको ये purity के बारे में पता है या नहीं, लेकिन अगर आप बात करें 22 carat की, तो 22 carat gold की अगर आप purity की बात करते हैं, how much pure it is, how you calculate it? Any idea? If you don't have an idea, I'll just let you know. Sir, it is around 91.67%. How it is calculated? It is calculated in this manner कि 24 में से जो 22 हिस्से हैं, they are pure gold, and rest 2 units are of alloy, that means some other metal which is basically mixed with gold to increase its holding capacity. Up 22 carat gold is 91.67% pure, है ना? And I am assuming that this 24 carat gold is 100% pure. So what they will do is they will convert this 24 carat gold into 22 carat gold. Sir, how they will do that? By increasing the weight. By increasing the weight. Let's suppose they have increased the weight to 120 grams, and if you calculate the pure gold out of this 120 gram 22 karat gold, the pure gold will come out to be 100 grams only. Pure gold will come out to be 100 grams only. On the other side, अगर मैं बात करूं, individual 2 has submitted 200 grams of gold, लेकिन वो 18 कैरेट है. अब उस 18 कैरेट गोल्ड को कन्वर्ट किया गया 22 कैरेट में, बट this 22 carat gold will have 150 grams. It will have the weight of 150 grams only. ये weight कम क्यों हो गया? Because now we have calculated the weight with respect to the purity of 22 carat, and here we have calculated the purity again for 22 carat. But पहले purity ज्यादा थी तो weight बढ़ गया, यहाँ पहले purity कम थी तो weight क्या हो गया? कम हो गया. समझ आई ये बात? क्लियर है? इसमें मुझे नहीं लगता कि कोई प्रॉब्लम होगी, मुझे नहीं लगता इसमें कुछ इशू होगा. इट्स वेरी इजी. अगर नहीं समझ आ रहा तो इसको ऐसे सोच लो, 100 ग्राम्स गोल्ड है जो कि 100% प्योर है, और जो 22 कैरेट गोल्ड है, लेट्स सपोज वो 75% प्योर है. लेट्स सपोज वो 75% प्योर है. तो आपका ये जो 24 कैरेट गोल्ड है ना, इसे आरबीआई ने कहा यू मस्ट रिप्रेजेंट इन दी फॉर्म ऑफ 22 कैरेट ओनली. अब 22 कैरेट ऑफ गोल्ड में मुझे चाहिए प्योर गोल्ड. कितना सर? मुझे चाहिए प्योर गोल्ड 100 ग्राम्स का. मुझे चाहिए प्योर गोल्ड 100 ग्राम्स का. सो ऑन दैट पर्टिकुलर बेसिस इट विल कम आउट टू बी 400 डिवाइडेड बाय 3. अगर मैं इसे कैलकुलेट करूंगा, इट कम्स आउट टू बी अराउंड, इफ माय calculation is correct, it comes out to be 133 grams in the form of 22 carat gold. समझ आ गया? If it is clear, give me yes sir so that I can move ahead. Same goes for silver. In case of silver, whatever silver you come up with, but bank will convert it into 999 purity levels only, and on that particular basis, the weight will be recorded at the time of pledging the gold with bank itself. Next point says, loan document must include details of the pledged gold. What all details? It will include the description, the weight, the value, process that will be followed if you default the loan. That means on that loan document, process should be written that if you do not pay back the loan amount, then recovery of the loan amount will be done. The recovery of the loan amount will be done by selling the gold, how the gold will be sold out, where the gold will be sold out, what will be the auction process, what will be the bidding process. Everything will be written on the loan document, and even time frame will also be written on the loan document. The day you pay back the entire loan of the bank, bank will pay back or bank will return your pledged gold. But what is the time frame? So the time frame is 7 days. Time frame is 7 days. But if bank do not return the gold of the customer, even after customer has paid the entire principal, entire interest, then the customer will wait for 7 days. After 7 days, bank will be charged with a penalty of 5,000 rupees, and this 5,000 rupees of penalty is supposed to be paid to the customer. Let's say bank pays after 10 days, so 3 days 15,000 will be the penalty given by the bank, and loan will be, or the gold will be returned to the customer. Is this point clear? May I have yes sir in the comment section. So these are few of the recommendations which have been done recently. So first recommendation is loan to value ratio capping 75%. Earlier it was 80%. Second is proof of gold ownership. Third is certificate of the gold's purity should be given by the lender at the time of pledging the gold with itself. Fourth point is gold which is going to be used as a collateral. It should be only gold jewelry, ornaments or specified gold accounts only. You can use the silver coins which are issued by the banks for collateral. Remember that for an individual you cannot borrow for jewelry value greater than 1 kg. You can borrow up to loan for a jewelry value up to 1 kg, and in case of coins the limit is 50 grams. Then the next point is whatever gold you submit to the bank, it will be converted and valued as 22 carat of gold only. Last but not the least is you will be getting a loan document with all the details, and the moment you return the loan, you will be receiving the gold back, or the pledged gold will be returned to you within 7 days. If not, then bank will be charged with a penalty of 5,000 rupees each day. Clear? Moving on to the next. The next is RBI has released a circular related to updation or periodic updation of KYC. We all know that what is KYC? Guys, KYC stands for what? KYC stands for know your customer. Whenever you approach to the bank in order to enjoy the banking services, bank asks the customer to fulfill the KYC norms where you have to submit your officially valid document with the bank so that bank can trace your identity, and your identity can be shared with the income tax department of the country and the other revenue departments of the country in order to avoid money laundering, in order to avoid circulation of black money in the economy, in order to avoid money hawala, in order to avoid funding of terrorist activities and all under Prevention of Money Laundering Act, under the Prevention of Money Laundering Act. So recently RBI has reviewed the conditions for the KYC. What are the conditions which have been reviewed? So know your customer master direction has been released by RBI. Again, it's a draft open for public comments. It is basically to streamline the KYC process, reduce the compliance burden and enhance customer convenience, particularly for those customers who are low risk individuals as well as the beneficiaries of government welfare schemes. So basically KYC norms have been revised in order to support, in order to increase or provide more convenience to the customers who are enjoying the financial services. RBI has proposed an amendment to its earlier circular which was issued in January 2024. So RBI has already issued a circular on KYC in January 2024, and this amendment or these amendments which have been announced, they have been announced with respect to this January 2024 circular only. That means the changes will be done in this January 2024 circular only. Remember that whenever this question is asked, what is KYC? As I already said, so KYC is a process which is followed by banks as well as the financial institutes in order to identify and verify the customer's identity in order to provide illegal activities like money laundering, terror financing and whatnot. Money laundering, terror financing and whatnot. Is this point clear? One second. Just a second, guys. Moving on to the next point. The next point says what are the proposals under this particular draft. The first proposal is bank shall permit customers. Please pay attention. First proposal. So bank shall permit customers to update their KYC details at any branch, including non-home branch, for the purpose of reactivating dormant or inoperative accounts. Now, what are these dormant inoperative accounts? Please pay attention. Guys, whenever you do not utilize your bank account for simultaneously, or you are not utilizing your bank account for 6 months, no transaction, not even balance check, no financial, not even non-financial transaction has been done for 6 months, or maybe for 2 years, or maybe for 10 years, then your account, I'm talking about the savings account, it is termed as what? It is termed as dormant account, inactive account, inoperative account or unclaimed account. Or unclaimed account. ठीक है जी? Or unclaimed account. Once your accounts are declared as dormant or inactive, or your account is declared as inoperative, or your account is declared as unclaimed account, if you want to reissue the account, if you want to reuse the account, if you want to reactivate the account, in that particular case, bank asks you to fulfill the KYC again, and now this KYC, in order to activate your dormant or inoperative account, can be done from any bank branch. It can be done from any bank branch. There is no need, there is no requirement, there is no hard and fast rule that in order to activate your dormant or inoperative account, you have to approach to the home branch only. No, that is not required. Bank will also provide remote KYC updation, which means you can update your KYC through the video based customer identification process. If this video based customer identification process is available with the bank, then you can even reactivate your dormant accounts with the help of the same. Got it? Moving on to the next point. The next point says banks may engage authorized business correspondents. Have you heard about this term? We call them as banking correspondents. What are these banking correspondents? I would say, sir, these are the individuals or the entities that bank appoints to provide banking services to the customers, especially in the areas where the traditional banks are limited. I'm talking about the rural areas, unserved area. I'm talking about the terrain which is pretty tough, where setting up the bank branch is not possible. In that particular case, bank utilizes these kind of agreements, which we call it as banking correspondents. They are the agents of the banks. So these agents of the bank, they are also allowed that they can collect the KYC document and help the customer in reactivation of their inoperative account. These are the key proposals, but along with these key proposals, there are certain amendments which are very important. In total, we have around 6 amendments which we will be discussing today. The first amendment which we have, which has been announced under this particular draft, the first amendment is basically related to financial institutions. They must apply what? So financial institutions, they must apply customer due diligence process at unique customer identification code level. Existing KYC compliant customers opening new accounts with the same whatnot. देखो, मुझे तो ये सेंटेंस जो लिखा है वो समझ नहीं आया. अगर मैं आपकी जगह हूं, I don't know what you are feeling right now, but if you ask me, for me, nothing is clear. So in order to understand this particular sentence, first we need to understand what is customer due diligence. Then we need to understand what is unique customer identification code. Once we are clear with these two terms, then we'll read this statement again. शायद समझ आ जाए. So please pay attention. What is this UCIC? UCIC basically means what? So it basically talks about the term that is unique customer identification code. Unique customer identification code is nothing but it is an alphanumeric code which is assigned by the financial institutions to uniquely identify an individual or entity. It serves as a distinct identifier for a customer, enable banks to track and manage their accounts, consolidate customer data and monitor transactions effectively. So what does it say? Let's suppose there is an individual named Madhav has opened up an account with SBI. Against my bank account with SBI, SBI has given me UCIC, which we call it as unique customer identification code, which is given by the financial institution, and they gave me the code Madhav78. Why they have given me Madhav78? Because last 2 digits of my account number is 78, so they have given me M78, or maybe if I say they can give me the code like MAD, first 3 digits of my name and last 3 digits or 4 digits can be from my account. Let's say it is 1313. So this is the alphanumeric code which has been generated by the bank, and against this alphanumeric code, bank identifies their customer. The name of the customer is Madhav. Done. Second, what is customer due diligence? Sir, it refers to the process of verifying customers' identity, assessing their risk profile before entering into business relationship, particularly in context of financial institutions. It is a core element of know your customer and anti-money laundering regulations which aimed at preventing money laundering and terrace financing. Now, coming back to the point. Financial institution must apply the customer due diligence process. So, bank must apply the customer due diligence process. What is customer due diligence process? It is a process of verifying the customer identity and assess their risk profile before entering into a business relationship with them at the unique customer identification code level. So this means bank, if a customer approaches to the bank will first complete the KYC process. That is, bank should complete the customer due diligence process, where bank has completed the KYC, bank has calculated the risk associated with the profile, and after calculating all this, bank will generate UCIC for the customer, that is unique customer identification code for the customer. ठीक है जी. Now, existing KYC compliant customer opening new account with the same regulated entity are exempted from repeating the process. So this means this is applicable for the customer first time. First time this customer A approached to the bank to open saving account. Now the same customer is approaching to the bank to open up a credit, I would say a credit card or a credit limit account. So in that particular case, you as a bank will be using this code in order to retrieve this information rather than processing the KYC again. Is this point clear? Is this point clear, guys? If it is clear, give me yes, sir. बात समझ आई? बात समझ आई? अगर समझ आई है यहाँ तक तो एक बार yes sir टाइप कर दो. जिसने अभी तक अगर इस सेशन को लाइक नहीं किया, डू हिट द लाइक बटन. कोमल, राहुल, Shraddha, Anuj, give me yes sir if it is clear. Thank you Shilpi for the reply. Now moving on to the next point. अगला point क्या कहता है? Second point is under the amendments, enhanced monitoring for high risk account is applicable to all relevant subparagraphs. What does it mean? It means whenever we talk about customer due diligence, we divide the customer due diligence into two categories. One, we call it as standard due diligence, and other one we call it as enhanced due diligence. What is the difference? Standard is the baseline of the due diligence that is typically applied to all the customers who reaches the bank with minimum or moderate risk, but enhanced due diligence is applied on the customer which holds a profile, and we call that profile as high risk profile. So there is, I would say, enhanced due diligence is more rigorous. It is more rigorous process that is applied to the customer जिनके ऊपर रिस्क ज्यादा है, जैसे कि हाई रिस्क कंट्रीज से उन्होंने इन्वेस्टमेंट की हो और दे हैव द रिलेशनशिप विद द कॉम्प्लेक्स organizations which are not doing well currently. So in that particular case, enabled due diligence or enhanced due diligence is need to be done. Next point is the term periodic updation of KYC has been replaced with the term that is updation of KYC to clarify the timelines. Now in case of low risk customers, if the risk profile is low risk, KYC will be updated after 10 years. If the customer risk profile is moderate risk, KYC will be updated after 8 years. If the risk profile is high risk, then KYC will be updated after 2 years. High risk थोड़ा सा समझा देता हूँ. Let's suppose guys, I am working in a company, or I am one of the director of a company which has been declared as insolvent. It is on the verge to be declared bankrupt. It's on the verge to be liquidated and closed down. So in that particular case, if I am opening up an account, in that case, my profile will be termed as high risk profile. And for that particular case, high risk customers, updation of KYC after 2 years, medium risk customer after 8 years, and low risk customers, KYC is need to be updated after 10 years. And remember that customer due diligence is of two types, standard due diligence as well as enhanced due diligence. Moving on to the fourth amendment. If I talk about the fourth amendment says regulated entities must upload or update KYC record to the central KYC record registry within 7 days. Now again, my doubt is in front of you. My doubt is, so what do you understand by the word CKYCR? What is CKYCR? So CKYCR is basically Central KYC Record Registry. What is the Central KYC Record Registry? You can think and take it as a database. You can take it as a centralized database in India that stores and manages know your customer records of the individuals in financial sector. So what is it basically? So it is like bank approaches, a customer approach to a bank completes the KYC of the customer. The entire detail of the customer's KYC will be updated on a centralized server, on a centralized database, and against a customer the KYC information is stored. So this authority, where all the banks, all the financial institutes, they are updating the KYCs of their customers, and this database can be utilized to retrieve the information of customers KYC whenever required, is known as Central KYC Record Registry. Central KYC Record Registry, where bank has been asked, financial institutes have been asked to update the data within 7 days of providing the business, or within 7 days of creating the business relationship with the customer. So it basically aims to streamline the KYC process, reduce redundancy, enhance security by providing single source of KYC information. So this was established to address the challenge of multiple KYC verification, because once a financial institute has done the KYC, once a financial institute, this bank has done the KYC of Madhav, then this information or KYC information of Madhav stored at CKYCR can be retrieved by bank 2 if the same customer approaches to bank 2 in order to open up a new account. So जब आप दूसरे बैंक के पास, दूसरी regulated entity के पास banking services या financial services लेने जाएंगे, so there's no need to submit, there's no need to fulfill the KYC norms again. Your entire KYC data and information will be retrieved from this central repository if it is updated. If it is updated. So unless the data is outdated, if the data is outdated, then they will request you to submit the new data. If it is incomplete, then also you have to submit the new data. But if your entire KYC process is complete and appropriate, then there is no need to submit or complete your KYC again. So it basically acts as a repository of KYC records, which ensures that customers' KYC information is stored in secure as well as accessible manner. It is beneficial because it is more convenient, efficient, it fulfills the security norms, and it fulfills the compliances related to the KYC document security. Question is, who manages CKYCR? So CKYCR is managed by CERSAI, that is Central Registry of Securitization, and Asset Reconstruction and Security in Trust of India. Accessibility, sir, it is accessible to all the regulated financial institutes, all the financial institutes which are regulated by RBI, like banks, even which are regulated by IRDAI, like insurance companies, and even NBFCs, they have the access to Central KYC Registry. Last but not the least is, so this CKYCR ensures KYC records and process a uniformity across the financial sector. इसका मतलब ये हुआ कि अगर आपने किसी एक कंपनी से इंश्योरेंस फैसिलिटी ली है और अगर अब आप किसी बैंक से एक नया बैंक अकाउंट ओपन करना चाहते हैं, then there is no need to complete the KYC again. The information which is stored by the insurance company in the central registry can be easily achieved in order to complete the requirement. Is this done? Is it done, guys? If it is done, just give me yes, sir. Now we can read the statement. This statement says, regulated entity must upload or update KYC details of the customer on the CKYCR within 7 days of receiving new customers information. Within 7 days of receiving new customers information. Second amendment is related to the designation central nodal officer under UAPA, that stands for Unlawful Activities Prevention Act. So central nodal officer under Unlawful Activities Prevention Act is now designated as Joint Secretary, Ministry of Home Affairs, which was earlier designated as Additional Secretary, Now the Additional Secretary designation has been replaced by a new designation which is termed as Joint Secretary of Ministry of Home Affairs. Joint Secretary of Ministry of Home Affairs. If you want to know more about this central nodal officer, please pay attention. UAPA nodal officer is designated official responsible for implementing Unlawful Activities Prevention Act. This officer is tasked with verifying assets. So this officer is responsible to verify the assets, is responsible to check the financial transactions in order to ensure compliance with the act, which aims to prevent financing of terrorism as well as other unlawful activities. So this officer is responsible for asset verification, can provide the order of freezing the assets if anything wrong is going on. It coordinate with the regulated entities as well as other government authorities in order to avoid financing of terrorism or any other unlawful activity. तो ये जो central nodal officer है, sir, he is given the designation as Additional Secretary of Ministry of Home Affairs, but now this Additional Secretary designation has been replaced by Joint Secretary. So Joint Secretary of Ministry of Home Affairs is designated as Central Nodal Officer. But if I talk about the State Nodal Officer, so State Nodal Officer is typically the level of Principal Secretary or Secretary of Home Department, and the financial regulators like RBI, SEBI, NABARD, RBI, SEBI, IRDA, they also appoint their nodal officers who are responsible to check as well as review these unlawful activities done through their regulated entities. So I hope it is clear. Now coming to the news. The news says, as per the latest amendment under the draft, it has announced, as per the draft, the central nodal officer designation, which was earlier Additional Secretary, has been replaced from Additional Secretary to Joint Secretary. Last but not the least is, rather than using the word section again and again, now in each and every circular of RBI, paragraph term will be used. So this is not new. It is applicable in all the references of RBI. But yes, this is also one of the part. I hope all the 5 amendments are clear. The first amendment announced is related to financial institutions. They must apply customer due diligence and complete the unique customer identification code for a new customer. But in case of existing customer, there is no need to do that. You can open up a new account. You can provide new services to the existing customer just with the help of unique customer identification code. Second amendment is enhanced monitoring for high risk accounts, which means enhanced due diligence is need to be fulfilled, and term periodic updation has been replaced by only updation for the timelines. If you have a high risk profile, then KYC will be updated after 2 years, moderate risk after 8 years, and low risk, your KYC will be updated after 10 years. Last 3 points are regulated entities. They must submit the record with Central KYC Records Registry within 7 days, and Central Nodal Officer under Unlawful Activities Prevention Act is now designated as Joint Secretary, who was earlier termed as Additional Secretary. Got it, guys? Clear? So this is all about the current news. Moving on to the last news. The last news is related to the KYC news only. तो एक तरफ तो उन्होंने KYC में कहा कि भैया KYC जो है, now the KYC can be done on bank branches all over the country rather than only approaching to the home branch in order to reactivate your inoperative or unclaimed account. Now there is one more amendment which has been announced with respect to inoperative and unclaimed deposit. It says that credit balance in any deposit account which is maintained with the bank, credit balance, deposit balance with in any deposit account, and if that credit balance or that account is not operated for 10 years or the account is declared as unclaimed, then in that particular case the entire amount is need to be transferred to RBI, and RBI will deposit that entire amount, principal as well as interest, into an account. We call that account as what? DEF. DEF stands for deposit. DEF stands for what guys? अभी 2 दिन पहले या शायद लास्ट क्लास में हमने पढ़ा है इसके बारे में. What is the full form of DEF? What is the full form of DEF? Sir, it stands for Depositor Education and Awareness Fund, which was set up back in 2014. तो आपको ये पैसा उसमें ट्रांसफर करना, ये हमें पता है. There is a need to enable business correspondent. So business correspondent will be allowed by the RBI so that the regulated entities like banks, NBFCs, they can appoint business correspondents who will complete the KYC process. Bank shall make available the facility of updating KYC for reactivation of inoperative or unclaimed account at all branches, and reactivation should also be allowed through video customer identification process if it is applicable for a particular bank. Additionally, an authorized business correspondent of the bank may be utilized, so you can also allow the business correspondents to complete the process of KYC so that reactivation of the inoperative accounts can be done. Is it clear? Okay. Now let's move on to, I call them as halki news. Let's move on to loose news which have a probability that they will ask in phase 1, or you can utilize these news data while writing a descriptive answer. If you are ready, after these 3 news specifically related to RBI, give me a thumbs up, give me yes sir in the comment section so that we can move ahead. टीना, these are not repeated. समझो ये है क्या, एक तरफ RBI ने अपनी KYC नॉर्म्स को रिवाइज करने के लिए एक ड्राफ्ट दिया, और दूसरी तरफ RBI ने जो अगला ड्राफ्ट गाइडलाइंस दी है दैट इज रिलेटेड टू इनऑपरेटिव और अनक्लेम्ड डिपॉजिट इन द बैंक्स. तो ये दोनों अलग अलग RBI के रूल्स नॉर्म्स हैं और दोनों अलग अलग में कुछ सिमिलैरिटी है. सिमिलैरिटी क्या थी? अगर अकाउंट इनऑपरेटिव है या अनक्लेम्ड है, अब आप KYC कहीं भी करा सकते हो. दूसरी तरफ KYC अब कहीं भी की जा सकती है इन ऑर्डर टू रीएक्टिवेट योर अनक्लेम्ड accounts. समझ आई बात? So one side they are coming up with the recommendations with respect to inoperative, other side they are coming up with respect to KYC. दोनों का मतलब सेम निकल रहा है, that is a different thing. दोनों का मतलब सेम निकल रहा है, that is a different thing. ठीक है जी, क्लियर हो गया? क्लियर हो गया. I hope you must have clicked the like button, you must have liked the session yet. Okay, अगर अभी तक लाइक नहीं किया, do hit the like button. तो अगली जो हमारे पास न्यूज है that is Alliance Global Insurance Report 2025. So recently Alliance Global Insurance Report 2025 has been presented. With respect to this report, what all things are important? First thing which is important, that sir, in Asia, India has become the second largest. India has become, or India, I would say, India will become the second largest country in terms of insurance services behind China. So Indian market is going to become the second largest in Asia, surpassing Japan as India's life insurance sector is set to grow. So why it is so? Because India's life insurance sector is expecting a growth of 10.5%. That is compounded annual growth, with respect to global growth of 5% only. But on the other side, which country is on the first rank? So China is on the first rank, which you need to remember. China is on the first rank, which you need to remember. Second point which you need to remember in this particular discussion is, which is really very important, from where the question can be asked. So what is the absolute growth we are expecting with China? So China is expected to grow annually with a rate of 7.8%, with a rate of 7.8%. और अगर हम इंडिया की बात करें तो इंडिया के कॉन्टेक्स्ट में दो चीजें हमारे लिए इंपॉर्टेंट है. पहली चीज, India's entire insurance market has expanded by 10.6% in 2024, जिसका expansion was 7.7% in the 2023, with premium income touching around $145 billion and highest growth was recorded in insurance sector. तो पहला पॉइंट तो ये हो गया. दूसरा पॉइंट है, in 2024 India has recorded 10.6% growth in entire insurance sector, and out of this entire insurance sector, highest growth in 2024 was recorded in health insurance sector, Last point, in India, majority insurance market is tapped by life insurance, where life insurance almost hold 75% of the Indian market, where life insurance holds 75% of the Indian market. Is this point clear? Is this point clear? If it is clear, just give me yes, sir. If it is clear, just give me yes, sir. Moving on to the next point. The next point says that there are certain reforms which have been announced by the government. So government has increased the FDI limit in insurance sector from 74% to 100%. This increase has been announced. Second is government has invested, or I would say government has infused 17,450 crore rupees. Government infused 17,450 crore rupees in 2019-20 as well as 2020-21, 2019-20 to 2021-22, which means I can say 2019-20 से लेकर 2021-22 तक, for these 3 years, government has infused capital of 17,450 crores into the government owned insurance companies. We call them as public sector general insurance companies. What is the benefit? So the benefit of this infusion is, for the very first time in the previous financial year, that is 2023-24, for the very first time, all the public sector general insurance companies, they have recorded profit. That means they were profitable for the very first time after so long. Is this point clear? Let's read out these terms. 74 to 100%. Government infused 17,450 crore rupees 2019-20 to 21-22, and in financial year 2023-24, public sector general insurance companies, they all became profitable again after historical losses. Now I'm giving you a homework, guys. Your homework is share the list of public sector general insurance companies. Share the list of public sector general insurance companies. Do share the list of public sector general insurance companies. Is this point clear? Okay. There is one more homework which I would like to share over here. What is the difference between dormant account, inactive account, inoperative account, as well as unclaimed account? So you have to make a list of all these four. Out of these four, two are same. Ab dormant is same as inactive or dormant is same as inoperative, that you have to check, but you need to give me the definition of both, in the definition of all the three accounts, as well as you need to give me the list of public sector general insurance companies in the comment section. Got it, guys? Moving on to the next. Guys, if you remember, a few days ago we have discussed about a company. What was the name? The name of the company was Porter, and I told you Porter has become the third unicorn of India in 2025. Now we have the fourth unicorn of India in the year 2025, and the name of that fourth unicorn is Drools. Drools is basically a pet food private limited company. So Drools has become the fourth startup to receive the title of unicorn in the year 2025 after Netradyne, Juspay, Porter, and the fourth company to be termed as unicorn, which means its valuation is above $1 billion. The name is Drools. Remember that India has become one of the largest market, or I would say one of the fastest growing pet care market in the world. So that is the reason this company has earned a lot in terms of revenue, and due to this revenue, the company has recently received investment from a Nestle acquired company back in Switzerland. So after that investment, which has been raised by Drools, minor stake have been sold out by Drools, which has resulted in increase in the total value of Drools, and the value of the company has crossed 1 billion mark, and that is the reason it is termed as unicorn, fourth unicorn of 2025. Last but not the least is your news, that is India recorded provisional FDI inflows of $81.04 billion. I hope we all know that foreign direct investment means when the investment done by a foreign entity, in order to manage, in order to run the business, in order to earn profit through management and administration, that is known as FDI. We have green FDI when the investment is done to set up the unit from scratch, brown FDI when the investment is done in already existing unit, and if this investment is done heavily, that could lead to merger or it could lead to acquisition as well. So merger example would be Maruti. In Maruti, Suzuki has invested and they merged to set up a new company that was known as Maruti Suzuki. So Ministry of Commerce and Industry has reported provisional FDI inflows of what value? So the value was $81.04 billion, which has marked an increase of 14% with respect to the last financial year 2023-24. So in 2024-25, expected FDI is $81.04 billion, which has grown 14%. FDI has steadily grown from a mark of $36 billion since financial year 2013-14. So this data is for reading, don't memorize it, and if you can memorize it, you can use it while referring or while writing a descriptive answer. Next point is, key highlights include over the past 11 financial year, from financial year 14 to financial year 25, India has attracted total $748.78 billion in terms of FDI, which has witnessed 143% increase in comparison to the last 11 years from financial year 2003 to financial year 2014, where the investment was $308.38 billion. This data was given on the government website. That is the reason NDA government has compared its data with UPA government timelines, but obviously time has changed, economy size has changed, nation quality has changed, delivery has changed, but still politics is politics. They are still comparing on the same manner. Moving on to the next point, nearly 70% of the total. So till date, India has received $1.07236 trillion of, this is the total FDI India received till date, and out of this total FDI, 70% of the FDI has received in past 25 years. 70% of the FDI has received in past 25 years. Quite obvious, guys. FDI in India has increased, or it has taken a boom after LPG, that is 1991, and not only LPG, even the nuclear summit, or I would say the nuclear deal, which is also known as 123 agreement, which India signed with US, that has boosted foreign inward investment in India, that led to the inflow of total FDI of $1072.36 billion till date. FDI source countries has increased from 89. Earlier, the source countries which were investing in India were 89 in financial year 2013-14, but now the source country has increased to 112, which highlights the growing India or growing trust on Indian economy. The count has increased from 89 to 100 and count has increased from 89 to 112 countries. No, Rahul, no data on net FDI on in this government, or I would say official document given by the government. Next point is the service sector has emerged as the top recipient of FDI in equity, attracting 90% of the total inflows. On the second rank, we have computer, software and hardware, and on the third rank, we have the trading sector. Then FDI into the service sector has increased by 40% in comparison to the previous year, and the value is $9.36 billion. Moving to the next point, India is also becoming hub for manufacturing FDI, which has witnessed a growth of 18%. That means in the manufacturing industries, our FDI has witnessed a growth of 18%, which has increased to a value of $19.04 billion, which was last year $16.12 billion. This is very important. This is very, very important. Top FDI destination. So I will be mentioning two things. If you'd ask me, in financial year 2024-25, name the states which have recorded highest foreign direct investment inflows, then my answer would be, sir, on the first rank we have Maharashtra with 39% of the total inflows. Then we have Karnataka, 13% of the total inflow, and on the third rank we have Delhi with 12% total inflow. Now, if I talk about the source countries, so the source countries are Singapore, 30% of the total FDI, Mauritius, 70% of the total FDI, and US is on the third rank with 11% of total FDI inflow is coming from US. Is this point clear, guys? So these are the things which you need to remember. These concepts, read twice. If you can remember, it's good. If you cannot, leave it. But this is must. You cannot miss to remember this part. And this is also must. You cannot miss to remember this part as well. That is the top FDI sources. Is this point clear, guys? If it is clear, just give me yes, sir. This is very important. This you need to remember. I hope each and every point which we have discussed is crystal clear. Do not forget to hit the like button before leaving, and do share the link of this session with your friends. If you have any doubt, you may ask, please. I have given you 2 questions as homework. First homework is, tell me what is dormant account, inactive account, inoperative account, or unclaimed account. Hai? What was the other question I have given you, guys? What was the other question I have given you? So can we say that ease of doing business is best as the source of? No, that's not the only case. That is not the only case. Maharashtra, geographical presence of Maharashtra is something which results in huge attraction of foreign direct investment, because it is approachable by all the means. That is also one of the factor. Then the next factor is growth in that particular state. Next factor is availability of resources in the state, and those all are the reasons because of which Maharashtra is on the top. In terms of GST payment also, out of the total GST which is shared by the states to the center government, highest GST is coming from Maharashtra. That is also a point. That is also you need to remember. Next question is, give me the list of public sector general insurance companies. Guys, do share your answers in the comment section, and tomorrow same time 5 p.m. we will be discussing the RBI annual report, and this report is very important. This will be asked in your phase 1, it will be asked in your phase 2, and even the questions will be asked in the interview from this annual report. So do not forget to join live tomorrow. Do not forget to join live tomorrow at 5 p.m. Trust me, guys, if you not watch the session live, you won't be able to understand it, and I won't be able to clear your doubts even if you will be watching that session in the recorded format. So do join it live. Tomorrow is Sunday. I will be waiting for you all tomorrow at 5 p.m. on the same platform. Bye bye guys. Take care. Good luck. God bless you all. See you soon. Bye.